Hi, everyone. It is 11:01, so I think it's time to get kicked off. I am Jessica Lockhart, and I have the pleasure of serving as the President of Innovation and Strategy for Global Impact Financial Solutions. And I am very happy to welcome you all to From Data to Dollars, a look into how integrating financial and operational data can help your firm realize some opportunities and increase profitability. I am joined today by three wonderful panelists. We have George, the CEO and founder of Micronetbd. We have Connor, the VP of Growth for DB Sync. And we have Dewan, the CEO and President of Finance for Global Impact Financial Solutions. And by way of introduction to our groups, Micronetbd specializes in implementing and customizing Salesforce and Litify for law firms, ensuring data is captured accurately and workflows are optimized from day one. Their team builds the technical foundation that allows firms to scale operations with confidence and clarity. You're followed by DB Sync, which provides seamless integrations between your financial platforms like QuickBooks and Sage and your operational systems like Salesforce and Litify. By automating the flow of financial data, DB Sync can help your firm eliminate manual entry, reduce errors, and gain real-time visibility into profitability. And finally, we have Global Impact Financial Solutions, more commonly known as GIFs around our office, which delivers strategy and operational consulting designed to help law firms turn raw data into actionable growth. By aligning technology, finance, and firm strategy, GIFs empowers leaders to measure true profitability, forecast with confidence, and scale sustainably. In addition, we also host a mastermind program for operational and technical leaders, the real implementers inside their firms, providing hands on guidance, peer collaboration, and practical strategies to drive successful adoption. I would also like to say, in terms of logistics, we would love to hear from you guys in the comments which case management software you're using, as well as drop any questions or comments you have. I will be moderating and make sure that we save time for those at the end of today's presentation. So, now that we've sort of gotten a high level overview of our trio, let's talk about why three groups here have teamed up. So, most firms sit with lots of valuable data, right? But it's all living in different silos. We have our case management system that knows one piece of the puzzle, accounting has another piece, and marketing sometimes even has a different section that they're working in. And none of it is all lined up and connected. And that makes it almost impossible for us to answer those big questions like what's our cost per lead, or which campaigns are giving me the most profitable case types and even clients. And that's why we're really here together. Micronetbd makes sure our data is captured correctly in our case management system. DB Sync is helping us connect that data to our financial system so that dollars and details are flowing together. And GIFs is really taking all of that and turning it into actionable strategy. And what really makes this trio different is that we're not three separate vendors that you're having to kind of try to piece together yourself. We actually do work very well in tandem so that the people that work with us get one unified, connected solution that can actually drive results. And of course, saying all that sounds amazing and great, but there's a lot of pain that comes with actually getting that in place. So, with that, I'm going to go to Dewan first and say, what is the biggest challenge that law firms actually face when they're trying to connect that finance and case management system?
I would probably say the biggest challenge that they face is really removing the redundancy and also improving their cash flow. That's the biggest impact for us is that if they remove the redundancy, that is actually I guess what I'm trying to say, the cost factor of impositions that don't add value to your financials, that really don't add value to the cases. So that's the biggest challenge they face on my end. George, what do you see as the biggest challenge?
Yeah, there's a couple of challenges. So it's a lot of the firms kind of rush with the initial implementation. And what ends up happening is sometimes a lot of firms have duplicates. You may have insurance companies with multiple locations, or you may have the same entity, especially firms that have quick financials and their CRM like Litify running already, and they want to connect the two. You have that data naming, right? Maybe you're calling ABC Insurance Company, and here you're calling ABC Corp. So how do you marry the two, because they're not connected? So, and maybe you have multiple locations, and you end up initial integration with the wrong entity. So the data duplication, data inaccuracy, like if that's not tackled professionally with proper matching and deduping, that's a huge challenge that you won't realize the challenge until a few months in, because you may not run into the duplicate data. And even if you have few issues, inaccuracies, you try to settle at the end of the month, you're like, it doesn't settle, what is going on? And so that is an issue. So initial implementation and data deduplication, super important. A lot of people skip that step or don't take that too seriously. So I do see that a lot in existing implementations. So I think those are the two major. And the other part, I would say, overall architectural foundation, like every Redefine instance is, depending on the implementation, there are some variances, and every QuickBooks is not the same, right? People implement their QuickBooks multiple ways. So sometimes people try to use the same prescription. That also ends up being a challenge. So the architectural implementation, depending on who's helping you with it, that's a challenge sometimes. But the data issue I see everywhere, like a lot of implementation companies and law firms kind of skip through that step or don't take enough time to clean that up. So I would say that is super important.
And George, let me jump right back in there one more time. I do apologize. So, after kind of thinking about this just a second, I would say that the biggest challenge when these systems aren't connected are the number of errors that actually cost you revenue, cost you time. I think we were talking yesterday about some of these, the impact of these systems not being connected. And one of the things we talked about was that 20% of your problems create 80% of your issues. So 20% of your errors create 80% of your issues. And when your systems aren't integrated, that's actually what transpires, because now you're talking about human error. You're talking about workflows that take more time. And when we talk about non-value added roles, I'm not talking about that your accounting department doesn't add value to your organization, but it doesn't add value to your cases. Yes. So when you have redundancy and errors in those areas, it actually compounds your costs long term. So I just wanted to kind of clarify that for a moment.
Yeah, no, that's an excellent point, because even before, obviously, when systems are separate, you have those inaccuracies and data errors. That's a huge problem people have to clean up. And then after you integrate, if you didn't clean up your data, then you still have issues. So you have issues on both sides of the equation if it's not done correctly. So I think that's why professional, taking your time and doing it professionally, and that is super important.
Yeah, so I want to go now to Connor and really think about how integrating these systems, really we've talked about what can happen if you don't integrate them, but how does integrating them actually help you really rethink how your firm thinks about profitability?
Yeah, so Duan and George had some really great points there. And for us, the reason that our company exists is because data should be a growth driver and not a roadblock for any business, right? And especially in legal, we see a lot of firms are stuck with these manual entry processes, these fixing error processes, and waiting, weeks for financials to be reconciled. And all of that can and should be automated in 2025. With us, what we see are these disconnected systems creating kind of invisible cost. So things that firms might not necessarily have top of mind. So yeah, you have the admin work where they're spending, on average 20 to 40 hours a week, depending on the size of the firm, reconciling usually spreadsheets. We see a lot of spreadsheets, chasing invoices, and then double data entry. And then, of course, the fixing those errors that come when you're having multiple humans enter and key in the same data between these systems. But where profitability really lives and dies is on that time to cash cycle. So when finance and case data are connected, you get that end-to-end visibility, the intake, the time, the expenses, the invoicing, the collections. And now billing cycles are tightened, write-offs kind of drop off, and firms stop waiting for reports and can actually accurately forecast on that case to cash cycle instead of being kind of lost between all of this data in disparate spreadsheets and systems and not really having an accurate view of what's going on.
Yeah. So, Dewan, I think you probably have some thoughts too on how this impacts how firms think about profitability.
Yeah. So I'll kind of take you a little bit back about my previous life. Before I started working with law firms, I was the regional CFO for Cisco Food Service, and we were at the time a $60 billion company, and we closed our books within 8 days, and then one of our push was to get our close to within 5 days. So you think about one of the 50 largest corporations in the world are able to close their books and get information, get reporting within 5 days. So think about your firms and how much more impactful you can be from a planning aspect, from a cash flow aspect, if you were able to close your books immediately. Jessica and I were working with a firm, I would say a $100 million firm, that we were looking at their books, and this is almost September. And the only set of financials they had be able to present to us were June financials. So think about the impact of being able to understand where your company stands and where your company is going if you're not 2 months behind, 3 months behind. So the impact on your cash flow, the impact on potentially if you have errors, the impact when not having systems connected is huge, because time is money, and sometimes when you shrink that time, it actually creates more opportunity for you to make money. So I tell everyone, our goal whenever we're working with firms is to get them to a 5-day close cycle, and that's just to allow their information to flow from their system that they're capturing all of their data into their financials. So that, I would say, from a cash flow perspective, that's huge, but just from a planning perspective, it's even larger for your firm. So
Yeah. And George, I kind of want to go to you and have you walk us through how does a firm even start to get these types of systems set up? Like, we've talked about what can happen if we don't set it up, but how do we go about getting it set up?
Great question. So many times firms come to us and they have an existing QuickBooks, an existing Redefining instance. Sometimes we are migrating a firm from an old system like FileVine or other system they have, and they're migrating to a Salesforce-based platform like Lidify. Those ones, we are basically, it's like a baby. We're starting from scratch because we have to move everything from an old architecture to the new. So we are architecting the whole process. It's a lot. So that's, I would say, an easy example when we're doing it. But then where we see challenges, someone else implemented their Lidify, someone else implemented their QuickBooks. QuickBooks is running, Lidify is running, and they come to us. So what we typically do, the process of those two scenarios, we have to first do our due diligence in terms of their data architecture. If they're using a old system like FileVine, we're migrating it, we do the whole data mapping, right? How the data structure is in their Needles or FileVine, whatever system they're coming from. And some of these older CRMs, they have like Needles, for example. You can have the same Needles version, like Needles 4.8 or 5.0, and within the same Needles, you can have different object structure. You might be using objects and data that's in the database differently, and you can even have some database differences too. So taking all that data and mapping it out, and also on the QuickBooks side as well. So that whole data mapping exercise. In addition to that, you have your existing QuickBooks. Like I was touching a little bit on the data duplication, right? So the data inaccuracies, data duplication on both sides, architecting it. So whenever someone comes to us, fresh migration, the whole exercise happens. We have an entire process in place to map out the data, clean up the data, and then when we are setting up your Lidify, typically what happens when in the Lidify, let's say if you get a check that come in, what are the objects you have to interact with? You have your matter, you have your resolution, you have your expense, sometimes you have your lien object, right? There's a lot of different layers of objects that you have to go through, right? So, but then your previous system might be different. So getting all that set up correctly, if it's not done correctly, and we do see a lot with existing implementations, and then they go ahead and quickly implement QuickBooks, and then 2 months later, like, this is a disaster, right? So we get that a lot to clean up and fix this. So initial data mapping exercise, we create it, and then queuing it. I think we spend a lot of time on that. So once the initial mapping and cleanup and getting both systems are connected, and this is a boring process. The client they don't necessarily see it. They give us the access, we're doing it, right? So that part is a lot of times people don't understand why you have to dedupe the data, why you have to make sure that ABC company and ABC corp, if it's two same entity, why do we need to merge it? And then maybe ABC company is tied to 5 matters in the old system, and ABC corp is tied to 5 matters. So what do you do in that situation, right? So you got to kind of spend a good time in cleaning up data and integrating it. So I think that's what we do. If it's existing or new implementation, we focus a lot on architecture and data mapping. Once that's done, our partner DBSync, it's very easy, because then it's just a matter of using the tool, doing the configuration, getting it all connected, right? That's the easy part. But what happens before we put in the tool is where the success of the project lies. If that's not done correctly, Connor can tell you, we both have seen many, many firms where Connor would send them to us like, George, can you guys fix this? And it was implemented wrongly. So that is a common scenario we do. So hope that makes sense.
Yeah, I just want to echo that sentiment, because for us, the early choices that are made in implementation, whether that's done with a partner or in-house or whoever is the one responsible for getting a CRM system up and running, and even on the accounting side, how that is structured, matters so importantly to how an integration is going to play out, and what amount of uplift and legwork is going to need to be done before going live in a production environment. Because if you rush this and just try and get something live with that data not being accurately cleaned up, you're going to have basically a year of patchwork being done post go live. So yeah, I definitely agree with George in making sure that you're taking the time to do it properly from the beginning of the project, and clean things up if they haven't been done, right up until that point when you do want to integrate.
Yeah, and I think it's really important what George and Connor are saying, right? Get all of the legwork done up front, do it correctly, make sure your systems are right and in order. Then what happens? Now, once everything's running correctly, you're going to have access to a lot of data. So, Dewan, I'm going to give you sort of a 2-part question that I want you to walk through with us, which is, now that you have access to all of this information, how does a firm go about determining what they actually need to look at, and how do they make that into something actionable?
Yeah, I always said that having too much information is just like not having information at all. I mean, it's just information overload. I like to start with in 2 areas. I like to start with the financials, because I think your financials tell you a lot about the health of the firm, and tell you the things that your fires that you need to address immediately. But I also like to start with the conversation of the leadership team and actually the owner themselves, because what their plans are for the year, where do they want to be on December 31st, 2025, I think says a lot about the firm itself, on where financials can tell you where you are. And now you're talking to the ownership to figure out where they want to be. And then you pick maybe 5 goals or 5 KPIs that for the firm basis are the most important things that drive the firm. And then you continue to whittle those down into each department that supports it. So I think that way, what you find out at the end of the year, if you're able to focus on those 5 and whittle it down within each department, have 3 goals that support it, what you're going to find is you're going to build your financials. You're going to build towards your profitability, your goals, and then it allows you to go bigger for the following year. I think the first basis is finding KPIs that are not just, I know a lot of people say, find a KPI that you can accomplish. I don't like to focus there because you may accomplish something that doesn't need fixing. So I always look at it and say, let's look at your financials, let's have conversations, and then we can create the KPIs that support it from there. I think it tells you a lot.
Yeah. So pivoting a little bit, we did have some questions from some individuals that, they have multiple departments. They have even sometimes multiple business entities existing. And so there's a lot of curiosity around how you set that up technically, how you make sure your financials are in line to actually measure profitability of each vertical. And so I'm really going to leave this one open to the three of you because I know all three of you have worked on projects like this. So, George, if you want to kick us off, please feel free.
Yeah, sorry, Jessica, I missed the question. What was the question?
Yeah, so how do companies go about sort of distinguishing their various verticals? How do they make sure that their data and their financials are split up amongst them?
Sure. So that is very, very important. So there's a couple of ways that can be done. So if you have different verticals within your firm and you're capturing them separate, like we had a firm where they're capturing their PI data into a separate QuickBooks and their other vertical data into a separate QuickBooks, and they're like one Salesforce instance, but the data is routing to different QuickBooks instances, right? That's a scenario. So in Litify, typically when you have your PI cases would be a different record type than your workers' comp cases, right? And then what happens is within your matter, Litify typically uses object like resolution object, expense, lien, right? So if it's an existing Litify instance, a lot of times what we see is all those objects is basically the same record type being used, even though the matter has two different case type. The other underlying objects have the same record type. So when you want to integrate with QuickBooks, right? Sometimes when we go into an instance and they want to split that, it's very important to make sure, not just at the matter level, not just at the transaction level, but all the different layers of, you need to be able to properly distinguish the types. Because you don't want to route the data into the wrong instance, right? So once that foundational separation, making sure, like what we do is check the objects to make sure it can be clearly separated. And sometimes people log things wrong way, and so we want to make sure it's human error proof. Like you may have a PI case and someone creates a resolution and they accidentally pick the resolution record type, which is the wrong, right? So we kind of first do the architectural inventory, making sure within Litify itself, how it should be set up, how can we prevent the human error, because it's one thing, everything's going into one QuickBooks instance. It's something else if you send the data to a wrong instance altogether, that'd be a disaster. So that foundational architectural cleanup within the Litify, and I say Litify, like no matter what CRM you're using, right, you got to do this. And then as far as the connecting to different QuickBooks, DBSync, so we're a Salesforce partner over a decade, right? So we have worked with MuleSoft and Delboomi and a lot of providers, but DBSync we really love because it's very stable tool, works really well with QuickBooks. Their support team is stellar. So both teams, we work together on many, many projects. And it's not you open a ticket and you wait, it's a 7-day to hear back from someone. If there's an issue, we have connection with their support team. We can easily get it resolved. So if you're wondering why I keep saying DBSync, that's the reason, is because as a Salesforce partner, I'm agnostic what tool we use. But in this financial scenario, it works really well. So with DBSync and us setting up the connections to the two different QuickBooks configurations, that's the easy part. And the tool is very easy to use, and configuration, our team have done it hundreds of times. So that's no big deal. Challenge is to make sure your platform architecture and data structure is set up to be able to properly route to different instances. And that's one way to do it. There are a lot of different ways to slice it, but that's one way to handle it.
Yeah, and if I could also add to that, a lot of firms out there do juggle multiple QuickBooks files, and typically the use cases we see there are they'll divide them up by offices regionally sometimes, sometimes by like practice area, and then sometimes we've even seen like trust accounts too being divided into different files. So out of the box, that data is going to be siloed. And with George talking about, the many ways to kind of slice and dice from an architecture perspective, one of the ways that we've seen that's really useful is navigating roles and permissions, even at the user level, as to who should be able to send the data to what file, or adding fields to accurately tag that data to the appropriate file based off of flows. There's a lot of different ways to do it. That's why it's, again, this always goes back to starting at the architecture level, because garbage in, garbage out. And if you can, set up those guardrails very early on, that's going to be the most effective data strategy for making sure your integration works properly.
Yep, but I just want to add, like for smaller firms or maybe mid-sized firms, you have trusting person who can choose the proper records, send it. That's probably the easiest way to do it. But as the firm grows, we want to kind of make it like a user. We don't want to make it dependent on the brilliance of that user or like that user doing it correctly. We want to make sure the system is set up in a fashion that even if they want to, it will prevent it, right? So that's always our goal. And so and sometimes we cannot do it. This firm comes to us say, I can only spend X hours on it. Doing it right way will take Y hours. Maybe at this point of the farm, we'll just trust this one guy in the corner to do it. But as we grow, obviously, we understand it needs to be. So it depends on the goal of the farm, but we always recommend to do it in a way to make it error proof. But then if the farm doesn't have the budget to do that, then they have someone who they trust. We could, like Connor said, do it based on permissions and control it that way. So there's multiple ways to handle it based on the business goals of the farm.
Yeah, and look, I'll add in there, not on how to do it, but the importance of doing something like this. The importance of setting it up correctly when you're in your infancy stage of your firm or wherever you're at in your firm, getting your information set up, getting it set up correctly. The importance of it is when you measure your profitability, you need to understand which areas of your company are growing the fastest. And that's just extremely important because it tells you where to invest. I think a lot of firms will start off and they start off in this, we're a small firm, we're going to start off and we're going to practice in multiple areas. And then as you start to see growth as far as customers coming in, you start to add your resources to where those customers are coming in. Doesn't mean it's the most profitable portion of your business. And so I think firms learn later in life that the profitability of their business is potentially the part of the business that they starved, rather than the part that they invested into. So I always ask firms when I'm working with them, or we try to break down that information so we can look at those verticals. And when you're using DB Sync and you're using Micronetbd to get your stuff aligned correctly, make sure your information is accurate. It allows you great decision making. It allows you to invest into the areas of your firm that are growing, and it allows you to make hard business decisions. Because I think most of the what we're dealing with is probably law firms that think they're in the business of practicing law, and what you're a professional business. And first, and this is what I always tell people: you're in the business first, and then you practice second. And I know that's probably not the most flattering part to for these firm owners who say we're lawyers by nature and by trade, but actually you're business owners who happen to practice law. And this is the focus, that you want a business that's going to have that's going to be around for 10, 15, 20, 50 years. Most of you want to pass your firms on to your family members. So getting accurate and timely information can help you in so many different directions. And it points you to where you invest. It points you to where your family invests. And I think it's beneficial in the long run.
Yeah, absolutely. So we've talked a lot of sort of hypotheticals, ideal scenarios. I know that each of you have all worked with firms and kind of taken them through the processes we're talking about. So I would love to hear just some examples of how you've been able to implement what we've suggested today in real world scenarios. So, Connor, why don't you get us kicked off?
Yeah, definitely. So, from our perspective, we've kind of seen every variation of the legal sector integration piece at this point. Just with Litify and QuickBooks alone, we've done over 150 of these projects. So I can speak in specifics where we know for a fact that we've been able to cut invoice turnaround time and that case to cash cycle down. We see anywhere from 20 to 30-day average time prior to getting integrated to being able to cut it down to as little as 5 days. Now, there's other factors as well. Dwan, you had a really good point there about them being business owners first who practice law second. And I love that analogy because for us, we work in terms of scalability and building in those practices into the business operational infrastructure, right? So when we're talking about, you know, people or process as a means of solving a business problem, integration is a process that scales, right? It's a solution that scales. And when you continue to solve these problems by hiring more people in the firm, you see those operational costs skyrocket and that profitability dwindle. It's a very short-term, short-sighted solution that again may be appropriate very early on, but when you start hitting any critical juncture, you need to scale it up. So for us, we really see that drive in operational efficiency. The way we've measured that is about 40% operational efficiency output benefited for small size businesses, and it scales with mid-sized. And then cutting down that admin work, which again we typically see 20 to 40 hours a week depending on size of firm, down to a couple of hours. And that's those metrics that we kind of live and breathe by as a company ourselves.
Yeah, like in other words, like shortcutting this initial process, right? Doing it the right way, setting up the right architecture so you can get the right reporting. Like Dwayne was saying, how it will save you money long term and help you make more money and invest in the right area. So if you shortcut the initial foundation to do it, a lot of times what we see is farms end up spending even more money long term because they're hiring more people to solve problems. They don't even know like why they have those problems, and so they just hire people to solve problems that could have been avoided if the proper foundation was in place. So, I mean, I'll give a couple of examples. So, if so QuickBooks, so a couple of clients, standard implementation. Let's say after we're done, what happens? You're managing your in the Litify side, it's synchronized over to QuickBooks, right? And in the one example I'll give you a firm, they were getting 150 checks a day. So how would you track that, right? You would go find the matter this check belongs to, you search for the matter, you find the resolution record, you find your expense, we may have to find the lien also, and then track the amount needs to be paid. And so you have to go through a bunch of steps, log that. So if you have 150 payments come in each day, imagine how much effort that is, right? And that's after the DBSync integration is done, data is flowing to QuickBooks, but then we saw a scenario where everything's done, implemented, routing correctly, but they're spending a ton of time, right, tracking the data. So as a Salesforce, we're just not a Salesforce partner for implementation. We also build apps on top of Salesforce, right? And Salesforce App Exchange, we do it for other companies. So we're like, okay, how can we innovate together with DBSync? How do we solve this problem? Where does it make sense to track? How can we give the firm the ability to track the resolution, track the lien, all all of the expenses without in a mass format without needing to do it one by one, right? Where does it make sense? Architecturally, we said it makes sense to do it within Lidify Salesforce. So we created a layer on top of it where the firm can, on a single screen, just type in the matter number, type in the amount that needs to be applied, and then on the same screen, get all the data entered, hit submit. We automatically will find the record and apply it into the proper record. And if we cannot automatically match up certain record, then we'll say, okay, out of the 150, 90, we have found the matter, found the resolution record. We're going to apply to it. But these 10, we cannot reconcile. The amounts are not matching. And then, on that same screen, they can clean up and submit. So imagine, instead of finding the matter, finding these records 150 times on a single screen, you get it done. So the firm ended up saving ton of hours. So that's an example of innovation. And also, we saw, like, we were implementing QuickBooks, everything's done, they're happy, but they get a ton of credit card expenses. So they're like always going in and tracking their credit card expenses. They're using Ramp. And if you know, Ramp allows you to create a virtual credit card number, and they'll give it to their employees, and they'll have hundreds of Ramp transactions each day. And then they were entering it manually, and then it's flowing to QuickBooks. So we ended up with, like, okay, you know what? Ramp has an API. Why do it manually? So how can we figure out if you're using a Ramp credit card number, right? And how do we tie it to the matter? So we did some innovations, and so we integrated with the Ramp API. Now the data is flowing from Ramp directly into Lidify, into QuickBooks. So it's about always keeping your eye open and innovation. The entire goal is to make sure manual data entry, you want to reduce it. If they are using Ramp to track credit card expenses, they shouldn't have to come back into Lidify and do it again. So then we, Connor and us talk together, and we say, okay, let's build this. So we build it, and voila. So it's all flowing into QuickBooks, and people in a position like Joanne would be super happy because all the financial data is there. So when we want to close the book, 60 billion, such a large company in your previous role, and closing in 6 days, that's impressive. I know firms that got tax extension because they could not finish their last year's book. So, so that is very impressive what Joanne, you mentioned in the large corporate world. But so if that large company can do it, obviously the law firms can do it. It's just a matter of getting the platform set up properly.
Yeah, and I do want to say, from a real world example perspective, we work with a ton of different partners across various ecosystems. We're kind of platform agnostic. But what I saw Micronetbd do with building this check reconciliation piece into the integration that they deploy for their clients, it blew my mind. And it really speaks to how necessary it is to work with partners who have industry experience as well, and really understand the problems faced day to day by the people working in those industries. Because for us, we build the integrations. We get an inquiry. Lidify tells us they need to integrate with QuickBooks Online or QuickBooks Desktop, and we go, okay, what's the use case? But we don't get the nitty-gritty details on a day-to-day basis. So when we have a firm like Micronet that we can lean on, and they come in and say, look, this is a real pain that customers are facing every day. This is going to save them tens of hours, on a weekly basis. Look what we built. It just really enhances what you can get out of a platform like DB Sync, because those fringe use cases are not things that we would be aware of or even think to build. So yeah, I just want to say I really appreciate what you guys did there. It's really impressive to see.
Yeah, and
being able to get a hold of your support team like that instead of having to wait 2 days for a ticket.
Yeah. And so Connor brought up a good point about scaling. I think every firm that's listening to this right now, they're looking to scale. They're truly looking to scale. And there's no more inefficient way to scale than to hire people that are not touching your cases, like to hire your administrative functions, to hire your accounting functions, to do actually physical work and not do the analysis to make your company better. So, a real world example is that, I've worked with a firm that was making $3 million in fees a year, and they had two accountants, and now they're north of 25 million, and they still have two accountants. And that's because we were able to integrate these systems and implement systems in place that did not make us have to actually add bodies as we continue to grow the firm. And as the firm not just grew in one single source, it actually diversified a little bit. It actually allowed us to take on more capacity in that accounting function. So I think it's very important for when you look at your firm and you're looking at doubling your size in the next year or doubling over the next 5 years, whatever you're doing, you can't look at bodies like finance and accounting and say, well, I have two people and I'm going to need four, because eventually your percent to revenue, your earnings per percent to revenue is going to shrink each year. Now, you don't get paid by percentages, you get paid by dollars, but wouldn't it be great if that same 25% that you were making at $3 million is the same 25% at $25 million? So you don't want to see that shrink. And look, we all know that with AI and everything going on, we're in a more competitive market. So you want to have people on your team that can help you hold that growth and hold that percentage to revenue, or even grow that percentage to revenue, so you can be more profitable long term and bring more dollars to the bottom line.
Absolutely. So as we sort of enter our wrap up period, we've talked about a lot of things today that people could do, things that we all think they need to be doing if they want to scale effectively. But I want to ask each of you to share if someone's feeling overwhelmed by all the things we've talked about today, what is the most practical first step they can take? George.
Yeah, I would probably say the most practical step would be to look at your resources around you. I think everyone has, if you do not have, if you're not a part of a good mastermind, or you're not a part of a group of firms where you can bounce things off of and you can figure out their pain points and things like that. I always said, to be a part of a mastermind, there's a lot of masterminds out there now. I tell you to shop. Jessica and I run a mastermind. I'm not trying to overly endorse our mastermind, but I tell you, we're looking for people that are looking to scale their firm technically, and that are decision makers, but also that are in the weeds and can do the work in the business. The reason why that's important is like-minded individuals can really help you grow your business. So I would say, look at the resources around you, look for opportunities to take a chance to do, reach out to firms like Micronetbd, DV Sync, and people like us to find out what we can do to help you. And I think, what partnerships they have along the way. This is a partnership between these three firms that could actually get in and help firms grow immediately. So when you come across things like this, it's about what's your biggest return of investment. This is about investing in friendships and partnerships that help you grow, and the connections that all of us have with different firms. If we can't solve your problem or help you solve your problem, we can connect you with somebody who can. So that's what I would say. First, start with your resources around you.
I can go on my end. And Dwan, I love that answer. I think one of the biggest pools of resources anybody has is their peers in any industry too. So I love that you guys have built that mastermind group, and I can't, shout your guys' praises enough, because just knowing what Jessica is able to do on the data and strategy side, and having your financial background as well, it's a huge resource for anyone to be able to, get connected to you and have you in their network. That being said, if someone comes to me, myself, DB Sync, the first thing that we're going to do on our end is point them in the direction of a partner who we think is going to be able to help solve their problem in the best way. For me personally, that's been George and his team over at Micronetbd. I've relied on them heavily for any of these integration use cases that have come up. And I know the level of expertise they have, not just in Salesforce architecture, but particularly Litify. And, this is the only partner I've ever had that immediately said, no, we want to learn the platform ourselves from day one. We don't even want to rely on you guys, for the first implementation. And when I see that level of dedication to learning the solutions that they're implementing, and then the added value of seeing things like adding industry level perspective into the build outs and implementations, that makes it a no-brainer for me. So if someone reaches out to me, I'm just going to send you to George.
Thank you, Connor. And it's been the same from our end also. So when we get clients who want to implement and we're checking at different connectors, for me, it's obvious to go with DB Sync for QuickBooks integration because it works, it's reliable. Multiple products may work, but what really I keep stressing this point is support is extremely important because as a Salesforce architect, over more than a decade, 15 plus years, done hundreds and hundreds of projects. One of the bottleneck is when something's wrong with a connector and third-party product that you don't control of, and large $100 billion companies support takes 2-3 different days turnaround time, and time is money and critical. So being able to rely on partner like DB Sync with quick support is extremely important. But I just want to add one more thing is we talk a lot about integrating and solving the solution, and we had a firm ask us, and this is a common question come up. Okay, you implement these complex systems, connect QuickBooks and Ramp and other systems, and it's running, but we're not technical. How are we going to, something goes, we won't be able to manage this long term because all these technical solutions, API integrations, what happens afterwards, and we cannot really afford to hire high-end developer to full-time. So what I tell the firms is, you have an internal person, let's get that person trained to do the day-to-day admin work on the platform, and then the integrations and continuous innovation, because firms have to maintain and improve as the business goes on, and also all these integrations and support. Typically, we came up with a package to solve that exact problem. Now it's a whole division of business at Micronet where we have a team of admins trained on all these different tools. So a typical law firm would have their internal admin do 90% of the work, and we will back up on the heavy things we will monitor and maintain and back them up, so then internal admin can do all of the work, because we're doing the 10% of the complicated work that would have got them stuck. And so they would have us on retainer for 10 hours a week, 20 hours a week, 5 hours a week, and then that kind of allows internal resources to do their job better. So that's one thing, kind of reassures them, okay, I'm not too technical, I can do the everyday user stuff, but what happens with these heavy system integrations? How do I maintain it? Well, don't worry, we got you covered. So there's a plan for that. It's not expensive. It's that's why we make it so that you can subscribe to a 10-hour-a-week plan, and 10 hours from a professional resources, it's probably 40 hours of internal time. So you're getting almost like a full-time coverage without having to spend that money. So
yeah, really nice. Well, guys, we are coming up on time, so I want to thank all of you for the great discussion today. Before we close, I do want to leave our viewers with this, and that what really makes this group different is that we aren't just a group of individual vendors trying to sell you a tool or a service. We actually really do understand why it's important to work in tandem, why it's important to have that network, because we know that firms need more than one piece of the puzzle, right? Together, we can build the infrastructure, we can connect the systems, and we can really translate that into strategy. And it's really meant to be a customized approach. We are not a one size fits all model by any means. And as we wrap up, really the invitation is this: don't just take the ideas we've given you today, really bring us into the conversation. Book a discovery call with us. Let all three of our groups sit on there and let's talk about your firm, your systems, your goals, and how we can really make sure the biggest impact is made. And we look forward to connecting with you, and thank you all, and really have a great day.
Thanks, everyone.
Thank you.
Thanks, everyone.